Beginning of the end? Hey, Chris here. Hope you're doing well. Today here on LiveDayTrade.com, I'd like to share my thoughts with you on the stock market. Based on my studies and several decades of experience, I have to say that it's worth being cautious. Sorry. In theory, everyone who has at least dabbled in the topic knows when to buy stocks in the market for the long run, right? When there's a recession going on, unemployment is high, company profit collapses, and you're bombarded with fear-based titles from every front page. We also know when to sell these stocks, right? Sure. When everything's fine and dandy, when prosperity is on a high level, unemployment is low, and the company profit soars. Something like the market conditions we see now. In theory, however, everything looks a lot simpler than it actually is. As we know, there are many options to evaluate the mood element of long-term economic cycles. One of the best ways is to monitor the different manager surveys and sourcing manager indexes. I'm sure every starter on the stock market has heard of the German IFO index. Let me show you on the graph. It had hit a level below 90 twice, once in 1993-94 and once in 2009. We can see that both periods created optimal stock purchasing opportunities. Now let's take a look at the American ISM index. This has an even longer history, and it's easy to see that in the last 50 years, if you would have invested in stocks based on when the index reached a level of 40 in 1974, 1980, 82, 91, 2002, and 2009, then you would have bought at approximate low points of all the markets. So it, behooves us, to say the least, to pay close attention to the IFO and ISM. And just a quick tip for the future. Next time this happens, we'll know that it's time to invest. But, when is it time to sell? This is where it gets a little complicated. This is harder because the topping of the stock market characteristically happens for a longer period of time than the bottoming does. The manager indexes usually signal too soon during the upswings that happen shortly after the panic of recessions. However, values that are too high are suspicious here as well. As we can see in Germany, the IFO index reached an all-time high in 2007, and guess what happened? A collapse. By the way, the situation is very similar now, where the German IFO was at an all-time max. So for those considering buying stocks now, this is well worth thinking over. Also, just my hunch, but I think the train has already left on this one. There's another great indicator. This also signals the approaching of a market topping. And it's unemployment. When unemployment drops to a 15-year low point, sooner or later the Fed raises interest because there's really no unused capacity left and the economy is exalted. This is what's happening now. Unemployment in Germany is at a 30-year low point. In the US, unemployment is at a 15-year low point. The ISM Manager Index is pretty high, but it's not extreme. However, the German IFO has never before reached this high of a level. Interests are slowly going to start increasing, and by all means, these are very strong warning signs. I'm not a prophet. I don't know what tomorrow will bring. I can't even say what's going to cause the next downward spiral, but history suggests that the stock market usually culminates in similar circumstances. The level of courage is very high and upward potential is pretty low. What's happening nowadays in the stock market shows us how startling the level of courage is. Let's take a look at S&P, DAX, or even the American or European blue chip stocks. For me, just going over these reinforces how investor courage, or in this case, irresponsibility, seems to be at a high now. And although the mentioned indicators aren't exactly capable of determining exact timing, because they can signal many months, even years in advance, I still believe that these are the signs for long-term investors to sell, and the time to return is when you see the word recession on every front page again, and small investors will be chasing after their stocks. So to summarize what we talked about so far, the end is near. The topping is closer than you think. The manager indexes may signal months, even years before the downward spiral, so let's be cautious when contemplating investing in stocks. So what's your take on this? Make sure to comment below the video. If you liked it, please share or follow us on LiveDayTrade.com. So thanks a lot for tuning in. Until next time, take care. Bye-bye.